Hi traders, Luke Saddard's here, back from leave. What a week to go on holiday. It's been very good for the dollar, the king dollar. It's earned that title. This will be put up live on TradingView if you have any questions, so you can join me there. So let's kick things off as we usually do on the FX side of things with the dollar. We can see here the dollars had a really strong run. That 21-day exponential moving average has been acting as a nice trailing dynamic sort of resistance support, with price dips being bought as it comes back to that line. Um, the RSI isn't deeply overbought territory. It's come down a bit towards the beginning of that 70 region there. I think, we're in a bit of a wait and see mode until that Fed meeting is out the way. We could see a bit of a buy the rumor, sell the fact price action take place on Wednesday as 50 basis points is largely priced in, actually just above 50 basis points is priced in by the market. So we could actually see a bit of a sell off here, back down towards maybe the 102 region. That could be a potential area to look at. And if we do actually see a strong reaction on the upside, 104 could be the level to take out. But dollar's looking very strong at the moment. And moving on to the euro, we can see, it's broken right through that descending trend channel, descending channel. We're putting in a bit of a base here around 105. The RSI is in deeply oversold territory, so that sort of helps a bit. There's not really any divergence here. Um, the RSI is kind of level there, even though we made a lower low here. But you are deeply oversold, and we could see a bit of a rally back up to at least the 106 region. Look at those round numbers. We've got the 21-day exponential moving average of 107. We could actually draw in a quick Fibonacci here and see some levels there. So yeah, we've got the 38.2 around 107.5, and the 50% level at 108.3, which is just below that lower trend line of the descending channel. Let's move on to cable. Sorry, let me zoom in there. Again, similar to Euro US dollar, broken through that descending channel. And again, putting in a base around 125. Prices sold off very heavily. Don't know why I don't have the RSI indicator up on here, but let me just get that quickly. Just change these settings. So yeah, again, the RSI is moving out of, it's in deeply oversold territory, and it's starting to try and move out of that region and have a bit of a rally higher. We've got the POE meeting up on Thursday, and some are saying we're going to see a dovish 25 basis point hike. So what I mean by that is, the economy is not as strong as the US, so they're not going to be in such a rush. They might hike 25 basis points and then sort of pause and see how the economy digests it. And I think, the biggest headwind for GBP is that the market's priced quite aggressively from a rate pricing point of view. And when the penny drops, which could actually be this meeting, we could actually see GBP come under severe pressure as a result of that. Let's move on to Euro GBP. Again, one of my favorites because it's just seems to work out so well. It comes up to that 63.68 RSI level as price rallies into the 200-day simple moving average in the upper trend line, and it comes back down again and falls. It works out all the time, it seems. But in trading, obviously, it works until it doesn't work. So, you've got to assess that. But again, I like, let's see what happens around that 50-day simple moving average. If we see a further sell-off, it breaks below there, maybe another retest of that 0.83 key support level. There's still a lot of room for the RSI to go, but before oversold fears start to creep in. Dollar yen, we've breached that 130 key psychological level. The Bank of Japan basically are going to keep yields suppressed, and that's obviously very negative for the yen. And as a result, that 130 level is breached. We're in overbought territory in the RSI, not as deeply overbought as we were. That 21-day exponential moving average is acting as quite a nice little dynamic support there on the daily charts. We'll have to see what happens. Again, a bit in wait and see mode given its correlation with US yields until that Fed meeting's out the way. I would say the bias is to the upside for yen, but if we see that sell the fact price action of the dollar, we could see a bit of a sell-off here, come back to this 128 region where there's a bit of sticky price action. Let's go on to the Aussie. Shocked the market, the RBA, by hiking by 25 basis points today instead of consensus at around 15 basis points. And they've said in their statement that further hikes will be necessary. So we saw, price was starting to put in a bit of support here around this 0.75 region. We saw price rally quite strongly today. It's up around about, what's that? Almost about just over 50 pips, 60 pips rally we've seen from where the closing price is. I've drawn this Fibonacci to see where some of the key levels are. Just below 0.72, we got the 23.6. And then more importantly, above there, the 38.2, we ride on that 200-day simple moving average at that round number 0.73. So the Aussie's going to be one to watch as the market maybe plays catch up with pricing. It wasn't too hawkishly priced, so we'll see how that goes. They want to get to neutral fairly quickly, the Aussies, the RBA, so that should be positive for the Aussie dollar. Let's move into commodity land now. Gold continues its slide low as it unwinds that substantial premium to its real to where its fair value should be based on US 10-year real yields. And we're back now below this 1.9 range support there. We're in the 1.855 region. We got the 200-day simple moving average not far off, about $20 lower. And we've got key support at around 1.830. So we'll have to see what plays out there. The RSI is creeping towards that oversold territory. So maybe we might see a bit of a temporary bounce if we see the Fed sell the rumor, price action, market reacts a bit dovishly. We could see a bit of a bounce, but I do still think gold is one that now should start looking at short the rallies playbook. Spot Brent, again, bit of a flat-sided descending triangle here shape, but it's holding up pretty well given the sell-off in risk assets and as well as the stronger dollar. We ride on that 50-day simple moving average, and price is pushing up against that downtrend line. The RSI is a bit in no man's land, so can't really discern too much informational value from there. Again, we've got this key support level, $100. That would be the level for bulls to watch very carefully. If that breaks, then a short the rallies playbook, in my opinion, should definitely be implemented, or could be implemented, should I rather say. And then lastly, let's just take a quick look at interest rate pricing here. May, as I said, the market's pricing just over 225 basis point hikes, so 50, just above 50. That's why it's like 2.110. June, 3.5. July, just shy of 5. And then September, we got 7 and a bit hikes. And now December, we're looking at 10 hikes priced in. Incredible 10, 25 basis point hikes. That takes us to about 2.5. And if you include, obviously, the 25 basis point hike we've already seen, then we are in restrictive territory. So hope you've enjoyed today's Technical Tuesdays. We've got a lot to sink our teeth in this week with the Bank of England and the Fed meeting, as well as non-farm payrolls on Friday. So good luck out there trading, and I'll see you all next week.